Okay, good morning, everybody. It's Tuesday, July 11th, 2023. We'll go ahead and take a look at what happened yesterday, and then we'll get into the pre-market for this morning. So I'm going to zoom back here, and actually, maybe I should bring up remember yesterday what we said from the lows of the overnight session. Where are we? So from the lows of the overnight session, this low over here, right around 44.11 quarter, we actually had some pretty good bullish signs. I'll go ahead and pull up, first of all, the daily, which, by the way, we said yesterday morning, if the market can hold that overnight low and the bulls do stay in power, we've got a beautiful potential bullish divergence starting to form off of the overnight low at 44.11 quarter. So we saw potential. Again, doesn't mean we were guaranteed a rotation to the tick right off that area. But if it was to hold, then yes, we were going to start to get the pattern that you would expect to see for that reversal. All right, so as of this morning, look at what we got. We've got a beautiful bullish divergence from the low that we were anticipating in yesterday's pre-market, and we have officially pushed, and with the new candle this morning, we actually have pushed through the high of the signal candle, right? This is the candle that showed potential divergence, and now we've got the break through the high. So it's technically official now. Now, does that mean we're guaranteed that this is now going to push 200 points to the upside? No. I mean, this could be, this could fail. This could be a nice clean signal that doesn't get any follow through, and then the bears come in and we just push to lower lows, and this whole thing will change. But as of right now, assuming everything stays the way it stays, we don't break through the low of Monday, the low of the week basically, then we can expect for the market to attempt to break out to the upside here. And that's what we said yesterday. We said, there was a little bit more weight for that bullish side. Of course, we kind of qualified that with the fact that it did bounce 20 points, 25 points in the pre-market before the market ever opened yesterday. But yeah, that's what we were seeing. We also had a nice hourly, really clear hourly bullish signal. On the 4-hour, it was an extrapolation out from all these previous lows, and then up to that low we made yesterday pre-market. And you could argue, again, not my favorite way of looking at divergence, but that definitely is divergence. So we had 4-hour. The hourly was a nice, clean local signal off that low. And then the daily was showing potential, right? So here we are, and we're popping. It's not too surprising. So let's look at what happened on the shorter time frames. At the open, we actually bounced directly off the 200 moving average. So if you were there at the open, you wanted to be, a bull, you wanted to buy the market. Well, your first opportunity was literally within the first 10, 20 seconds of the open there. It went right off the 200. Again, a nice, beautiful textbook trade setup. And then the market bounced. And that probably would have been your best opportunity for the day because, like I told you, if we come up, and I might have to bring the 60-minute chart back. When we were looking at the ranges here, I told you that this pocket in here, around 44.30, whatever it was, to 44.50, or I think 44.30 to 44.50, that whole pocket in there was more than likely going to be very choppy. And so let's look and see from, again, let's bring this back, from about 44.30 here to 44.45, that's the high of the day. The whole range there, it was just choppy, right? The entire day. From 44.30 to 44.50, it just went sideways. Was the overall trend higher? Yes, we did hold to make higher lows compared to the low of the overnight session. We did push to a slightly higher high right at the end of the day. So it was a bullish day. If we went back to that daily chart, it was a green candle that has a wick to the downside and then closes up off the highs. But it was, like I said, I warned you, between 44.30-ish and 44.50-ish, it was going to probably be a mess. So let's look and see what happened here. So, like I said, that was probably your best opportunity, was to buy right at the open off the 200. You would have at least gotten yourself a 10, 12, 10, 11, 12 point push higher. In fact, it probably would have given you, if you bought the 200 at 44.29, you actually probably would have gotten about almost 15 points, if not 15 points. And it never came back to test that area. So that probably was the best opportunity. At about 15 minutes after the open, you can see we held the 200 with less than a 2-point break 2 times. But look at it, kept making lower highs, and then eventually just really disrespected that level. Barely did anything with it. And then finally, the bulls came back, and after the sideways kind of consolidation into this little chop range, and then pulled back in. That would have been another great opportunity, especially if you're watching the market here. And remember, this is more kind of trading, continuing education for how you might interpret this stuff. If you were watching this yesterday, and here's the open, and you see the market's barely doing anything, it just kind of came right through the 200 now, and it's kind of making a lower low for the morning here. But then it pops all the way back up, and we start pushing to new highs for the day. Well, that was maybe your clue. Again, we had a bullish bias from the overnight low, and we were continuing to push and holding, essentially on the pullbacks, holding the 200 here. So as it finally went from sideways here and consolidating to popping to new highs, well, now you're back to, hey, maybe I should continue to buy the market given our bias. So there was a very, very aggressive opportunity off the fast moving average, but then this pullback right to the 200, again, another textbook pullback to the 200 in a trend, and you would have gotten the pop. Now, there was no follow through. It didn't quite get through the high of the morning, but you would have been able to capture at least a 5-point bounce, a little over 5 points, and then it failed on you and came lower. Now, I want to talk about the pullback here from the perspective of fibs. So if you were watching the market and, you threw your fib up, which I tell you, when you have a major turn in the market, a major rotation, that's the beginning of your new leg up, right? So for the morning here, if you were tracking your fib, you would have originally had your fib from the overnight low up to this high in the pre-market. And interestingly enough, it bounced just about a tick in front of the 38. So it was not only the 200 moving average, but essentially a nice 38% retrace of the overnight leg up. But if you continue to track it and redraw to new highs throughout the morning, let's go ahead and move this over and move it over. I think by this was the high of the day basically until right at the end of the, right around the close. If you drew your fib all the way up to the high of the day, it was about 7:30 in the morning on the Pacific, 10:30 in the morning on the East Coast. Well, now you had your deeper fibs if the market was going to pull back from that double top it made just up around the 50% retrace here, or that might have been the 61.8 of the smaller leg that we put on the charts yesterday. Peaked right into it and started to fail. Well, I just want to show you here what happened with the fib leg. So first, and I'm going to have to maybe even hide that for right now, and maybe I'll just delete it. Let's go ahead and remove that. That's the fib from yesterday, the 38 that we were watching, and then we had the smaller 50 up there. I'm going to get this 38 out of here. So again, this leg up from the overnight low up to the high of the day, notice where we came down to and held for a short time here. We came to the 38, little peek through, bounced up, held the 38 discreetly to the tick, held it nearly to the tick there discreetly, and then let's zoom all the way in here, failed right off the FMA on that third bounce off the 38 retrace, and just didn't have enough bullish strength to push through, and failed, and notice where it failed, and then found its next level of support right off the 50% retrace of that leg up. I mean, we're talking nearly to the tick here. And then finally, after it came down, and this is that stair-step action that I teach and I talk about all the time, we get our fib leg up. Okay, there's the fib leg for the day, the low of the overnight session where we had all of our bullish clues yesterday morning, all the way up to the high of the day. Draw your fib across, it came down and held the 38, again, nearly to the tick here, for 3 tests, failed off the FMA with not enough bullish strength to pop out and break out, came down and held the 50, again, not to the tick, it came down just 2 or 3 ticks through it and bounced, held the VWAP nearly to the tick, and if you're watching the market and you're seeing it continue to fail, it holds off the back end of the freaking 200 for a beautiful, that, my friends, is one of those textbook setups when you get the failure through and then it pops back up and comes right to the 200. In fact, this right here was the first little opportunity, a little micro pullback right to it, if you right, and then there. So anyway, I digress. But if you were watching the market and it failed through the 200, came down, failed through here, well, maybe you should have shorted the market, right, to see if you could get in off the 200 to come lower. And so finally, going back to this fib analogy or fib example, we held the 38 for 3 tests, failed off the back end of the FMA, and this was really the point I was trying to make. If you were seeing this kind of price action, being a bear might not be a bad idea, seeing that we got through the 200 and started to pull back and get below the VWAP. Again, another textbook kind of clue in the market that it's getting weak when we start to really push through the VWAP and come all the way down like that. Well, what about a trade off the back end of the VWAP? That would have been a beautiful opportunity. Again, a couple ticks of a break, and then it came right back down to the 50% retrace for the support. So that, again, these type of setups, playing off the back end of the 200 here, that would have been the most ideal setup, especially because it was probably exactly a 38 retrace as well from the high of the day down to the low that it had made at that time, right? If you were just watching the market in real time, you threw your fib across the sell-off here, well, there's your 38 retrace, tested, and failed. It was even the close of the day before, so you had just a whole bunch of stuff, 38% retrace, the 200 moving average, and the close of the day before, and sure enough, it held it 3 times here. It failed through, and it's hard to see with all this crap on the screen, but failed through, came right to it here, failed, came to it again, failed, came to it a 3rd time there, and then it continued to sell off. So these are the type of things you want to be thinking about in terms of trade setups and what you might be thinking in terms of direction. So finally, to finish the fib example here and go into the pre-market for this morning, held the 38 3 times, failed off the FMA, came to the 50, held it, broke it by 2 or 3 ticks, and then we bounced a tick in front of it twice. So there's another 3 tests of the 50% level nearly to the tick. Actually, a 4th test that was to the tick right there. And then still not enough bullish strength, right? Every time the bulls tried to hold off the fib levels, we got rejections off of our discrete levels, the 200, the VWAP, and then finally they tried to come back up and failed off the close of the day before again, and then held the 50 again, still not enough strength, and then finally we come down in the low of the day, was the 61.8 retrace within 2 or 3 ticks. Okay, so this is that stair-step action. Get a leg up, hold the 38, bounce, hold the 50, bounce, hold the 61, and then break out to the upside, or at least attempt to. Right, so that's what happened here yesterday. Some, again, inside of 44.30 to 44.50, basically all of yesterday's price range here, it was going to be choppy. I warned you about that, and sure enough, it was very sideways. Although the overall trend was up, it was very sideways within that range. So at the end of the day, once it held the 61.8 and the market did bounce out of there, notice what happened. It got through VWAP. We got back through the close of the day before. We got up to a new high for the afternoon or the early morning there, or lunch hour, I should say. Came back and held the VWAP here, not only once within 2 or 3 ticks, but a second time it bounced 1 tick in front to finish the day out, and then pushed to a slightly higher high for the day. So pretty interesting stuff, even though, again, when you look at it, it was very sideways and choppy. The open was here. It bounced right off the 200 and then basically chopped around. So that covers the lesson for this morning on yesterday's price action. Let's jump into this morning, and as you can see right now, market is attempting to continue to push higher, and we're failing nearly to the tick off of 50% of last week. I'm telling you guys, the reason we look at these levels is because I see these type of reactions happen all the time. Doesn't mean every time we have a level it just holds perfectly, but again, when it does hold, look at this ride off the FMA all throughout the pre-market here, right up to the 50%, and now we're getting a pullback off of it, a double top. So let's look at the higher time frames and see. Remember, on